Good morning. My name is Robert Moffitt. I'm a Krieger-Eisenhower professor of economics with a joint appointment in our School of Public Health at Johns Hopkins University in Baltimore, Maryland, in the USA. You can see from my background here, it's a beautiful campus. I've been here about 25 years, and I've enjoyed the campus and the faculty here. It's an outstanding institution, and I'm happy to say we have many faculty and excellent graduate students from Korea, and I've learned a great deal about Korea from my colleagues and from my students. So I'm very happy to be here and to talk today to the Seoul National Forum on Safety Income in 2022, and particularly about the Seoul Safety Income Program, very exciting program. And I'm going to talk to you about my views on the negative income tax, on programs which share some similarities to the SSIP, the Seoul Safety Income Program in Korea. And I'll talk to you about a lot of U.S. evidence. I should say I know evidence from many other countries, but my best expertise is the U.S. So I'll spend my limited time talking about that. So I have a number of slides, and I'm going to go through them briefly, and I have some little time for discussion questions at the end. So let me share my screen, share my slides, and let us begin. And again, I'd like to thank the Seoul Metropolitan Government, and in particular, Mr. Si-Hoon Oh, the mayor, for inviting me. The guaranteed income and the Seoul Safety Income Program. I talk about U.S. evidence and what some of the issues I see are with the SSIP. And let me share my screen here, not so you don't see everything else. Okay. So the introduction here, guaranteed income. I think we have a number of experts on guaranteed income. I saw in the agenda, so I don't need to spend time talking about the long history. Actually, it goes back many centuries. The United States has only been seriously proposed about 50 years ago, but it's been talked about a long time. However, the popularity has grown and fallen, and recently it's gained a lot of interest in the United States and around the world, renewed interest. So it's a very exciting time to be discussing the program. So I'm going to talk about four different things in my talk here. I'm going to talk about the benefits and costs of the guaranteed income, and I'll talk about those benefits and costs, and what evidence we have in the U.S. on a guaranteed income. And I'll talk about the economics of the guaranteed income with a particular focus on work incentive issue, which I've done a lot of work on and is perhaps the most well-known issue in the general public and in policymaker circles with a guaranteed annual income. The United States evidence on work incentives, I'll present what I view to be the best evidence on that issue. And then I'll say a few things about the Seoul Safety Income Program and issues that I see with it and how it fits into the larger set of evidence. Well, benefits and costs, the SSIP is a form of a negative income tax, which means that it guarantees a certain amount of income to all families who are eligible and who participate, and then it phases it out at a fairly low income level. The SSIP phase out fairly low, not about 85% of the median income in Korea, but that's not low, but it's not as high as it could be either. I'm sure some people would like it to be higher. But typically, the negative income tax does not go that high up into the income distribution, and that's one of its chief characteristics. I'm not going to talk specifically about the UBI. I think we have some other people here in the forum who will be talking about that. But the NIT and the UBI share this one similar feature, which is that they both guarantee an income to everyone who's eligible for the program who participates. So guaranteeing that floor, making sure that no one falls below that floor is the key characteristic of both programs, both the NIT and the UBI. So what are the benefits? Well, the benefits are well known, and I'll talk about the evidence for a minute, but just to list some of the evidence, if you've read anything about the lives of low-income families and disadvantaged families, you know they struggle day to day to quote unquote make ends meet, to have enough income to manage their lives successfully and afford the basic standards of living, of food, clothing, housing, and other necessities of life, the basic necessities. They struggle with that, and they don't have enough to really buy that minimum. If you give them more income, they will certainly be able to use that income in a number of ways. The adults and the children will have more income. Poverty rates will fall. Another benefit of extra income, is it'll smooth out unstable income paths. When they lose a job, they'll have some income to fall back on. Or if they have a sudden expense, like they have an automobile, the automobile breaks down, they have to pay for repairs, they will have the money to do that. So it helps them reduce their instability in their lives. It also might improve their health. We know that poverty makes health worse through nutrition effects, healthcare, and many other environmental concerns. And also, it has a longer impact if that money affords low-income families the ability to pursue higher levels of education, or to pay for training programs, or to move to places where there are better jobs, many different benefits. They will have long-run impacts, and it might have long-run impacts on the children. We know that children who grow up in poverty have worse outcomes in the future than kids who don't, and that will be another benefit. As I said, I'll talk about the evidence for these in a minute. I do want to emphasize the insurance angle, that programs for a guaranteed income benefit not just those who are poor right now, but benefits those who are not poor right now, but might lose their job and fall into poverty. Those families will be temporarily poor, and a guaranteed income has the possibility of helping those families out on a short-term basis. However, there is one feature that you need for a program for that benefit to occur. That is that the program has to be very well suited to enroll people quickly and give them some money temporarily for a few months or a few weeks. And a lot of programs have a difficulty acting that quickly. But that's necessary if you want to have the benefits of insurance to a guaranteed income. So what are some U.S. evidence on the benefits? We have a lot of evidence from our different programs. I should emphasize the U.S. does not have a guaranteed income. We have a lot of programs of different types which provide different kind of benefits. We do have only one program that everyone is eligible for, and that's our food stamp program. And families who are low income of all types, married, unmarried, whether they have children or not, whether they're older or young, it doesn't matter. Everyone is eligible for that. So that's the one we have. But the other programs we have for medical care, almost everyone, and for the older population and the disabled population, we almost have a guaranteed income, but not quite. And we have a lot of other programs, but not guaranteed for everyone. Their eligibility is often limited. The evidence is that, first of all, our programs taken together almost reduce poverty rates by 50%, almost by one half, which is millions of families. So it's having a tremendous impact in the United States. We also had quite a bit of evidence for some field experiments back in the 1970s, and those gave more evidence of benefits. Housing expenditures increased, home ownership went up, education levels went up, and children did better in school. Their test scores did better if they received the guaranteed income back in those experiments. It can reduce parental distress. Mental health is very important. And you can imagine that parents are very stressed when they can't afford the right expenditures for their children. Guaranteed income has been shown to reduce parental distress. Our food stamp program has tremendous effects on health, both for adults and children. And that program also reduces the instability of family income. It can act fairly quickly. You can get food stamps pretty quickly if you lose your job in a very short period of time. We have many, many other studies, and I could spend my whole time talking about all the studies that have been done in the United States. But there's overwhelming evidence that there are tremendous benefits to guaranteed income. There's also a cost side, and I don't mean the cost that I'm talking about monetarily. The poverty has a cost. There have been estimates in the United States of how much GDP is reduced by poverty, by families who aren't as productive as they could be. The jobs are low-wage jobs because they don't have the skills to be productive members of the labor force. And also the fact that they often receive welfare benefits that they wouldn't have if they were able to escape poverty. It's been estimated that GDP in the United States is 4% lower than it could be if we didn't have the same poverty rates we have. So that should be kept in mind as well. Like Korea, the U.S. does have some holes in our safety net. We don't have guaranteed income, as I said. And so we do have a number of families that are in very deep poverty. About 3%, 3.3% of the population are very, very poor. Back in the pandemic in 2021, Congress did pass a child tax credit. It was called basically a guaranteed income for families with children. Unfortunately, that expired, although Congress now is trying to reinstate it. We also issued a report from our U.S. National Academy of Sciences in 2019, which did a lot of calculations, which showed that if you had a guaranteed income, which we don't have in the United States, but if you filled in all the holes and you supplemented the program sufficiently, we could reduce poverty by 50% from where it is right now, even on top of our current reductions. And so there's a great potential here, which remains to be fully exploited. The cost, well, obviously the financial cost is a large one. The U.S. spends about 14% of its budget, the federal government budget, on safety net programs, and even more than that, almost half of the budget, if you count our old age Social Security program, pensions for the elderly, and also programs for the disabled. That's a very large amount. So we're not talking about small amounts of money here. Cost is a serious issue, and it has to be balanced to get all the other needs of society. The indirect costs are possibly decreases in work, possibly decreases in the desire to get a higher level of education, and I'll talk more about those in a second. And what about the economics? Okay, the economics is familiar to any economist. I know there are some in the audience here. And the economics of a guaranteed income is expressed by this formula, where G is the amount you guaranteed. If you have no money whatsoever, E is earnings, and if you have no earnings, G is the amount you'll get. And then as your earnings go up, as the letter there, E, goes up, benefits are reduced by the rate little t. T is the benefit reduction rate. Some people call it the tax rate, and that is at 50% in the Seoul Safety Income Program. So total income is the sum of the benefits and the earnings. And this is a familiar diagram to those of you like me who worked for years in this area. And it shows on the horizontal axis how much earnings a family will have, and on the vertical axis, Y is their total income. If they have zero earnings, they will get the G. G is their maximum amount of income. And as they work more, as their earnings go up, the benefit will fall. B is that vertical distance. As you can see, it'll get smaller and smaller as E goes up, and eventually the vertical dotted line there shows the level of earnings where the benefit will fall to zero, and the family will no longer be eligible for the program. Now, the message of this diagram is, number one, most benefits go to the lower income families. More benefits are channeled down to the poorest families. And that's a feature which most programs want to try to do, not a UBI, but all negative income tax programs try to furnish more money to people with the lowest incomes. Sometimes that's called target efficiency, targeting benefits on the poorest families and giving somewhat higher income families somewhat less. So that's the feature. Now, you might say, well, why not give a little bit more income to benefits to the people higher up by lowering that reduction rate? And this is what would happen. If you lowered that little t, then you'd get the new dotted line. And that would, in fact, not phase out the benefits so quickly. And therefore, more people would receive benefits higher up. The cost side of that is that more people will be eligible for the program. And on the horizontal axis, I've shown the range of earnings, which will now become eligible for the program. This is called the iron triangle problem, which is a trade-off between the guarantee level, the minimum, the benefit the maximum benefit for the minimum income you'll receive, the little t, and the cost. You'd like to have a high G. You'd always want to furnish a good standard of living to people who have no income whatsoever. You want to keep little t low, not only because you don't want to phase it out so fast and you want to give higher income families some money, but you also want to encourage work incentives. And yet when you do that, if you keep the G very high and the T very low, it's going to be a very, very costly program. So you have to weigh these things against one another, and there's really no solution to this problem. You have to balance those different factors, the G, the T, and the cost, and decide where you are comfortable. Society has to decide that. The government has to decide that. And the people of this country have to decide where they want to locate that balance. I have a note here on multiple programs. Anytime you put a new program on top of many others, you have to be very careful because the existing programs already have work tax rate in them. And if these programs interact, you will have some additional offsetting effects, which may not be immediately apparent. I'm not going to go through these equations, but they're in my slides if anyone wants to look at them. Now, what's the evidence on work incentives from the United States? The best ones we have are from those field experiments, negative income tax experiments we had in the 1970s. And there you see that they did show some reductions in hours of work. Their main measure they used, and it shows the reductions right there. More for wives than for husbands. More wives are on the borderline of working and not working, and they reduce their work more. There's some controversy about whether these are too large or too small. There were a lot of issues in the design and analysis of those experiments, and I won't take the time to go into those. Simply say these are the estimates, and you can read the studies on this to decide whether you think they're overstatements or not. We have evidence from our other programs. Our food stamp program seems to have really no effects on work, and nor does Medicaid. But our housing programs, a very good natural experiment study was done a few years ago, which randomly assigned people to housing programs and did show a minus 11% reduction in earnings. One of the features that comes out from all these studies is that while the work disincentives are not zero, okay, there are some work disincentives on average. The biggest ones are for women with children. And that's because a lot of women, which particularly young children, would like to spend more time at home. And if you allow them to do that, then they will spend more time with their children. If they're poor and you don't have any support forever, they have to work, even if the child care is not very good. But just to keep the family income, they have to work, even though they would like not to. So that's one of the big effects that comes from the program. And a lot of people would say it's not terrible that mothers with young children would actually prefer to spend more time at home. What about the SSIP? Like a lot of our programs, which are, so we don't have a safety net that fills in all the holes. It's intended to fill in the holes that are not covered by other programs. You have your NBLSS, which has very restrictive eligibility conditions and a very low eligibility level for income. If you go down to the very poorest of the poor, I saw one statistic which said that only about 41% of the poorest families in Korea, lowest incomes, lowest assets, only 41% of them are getting benefits in that program. And people with more income and more assets are getting even much less. So there are a lot of people not getting that benefit. The SSIP will go to those people with low incomes who aren't eligible or aren't participating in the NBLSS. The SSIP also has a much higher eligibility level, so it will also cover more higher income families. So it will cover both more lower income families and more higher income families. So that's going to have many benefits to up and down the income distribution. The interaction with other programs are very complex. You're not going to be eligible if you're receiving the NBLSS. So other programs are taxed at 100%. You do have an earned income tax credit, which has its own tax rate. My one recommendation for the evaluation team here, because of the complexity of the overlap with other programs, I suggest the team consider constructing a simulation model and actually compute what they expect the total benefits and the total benefit reduction rates for different families will be. So in summary, I think it's fair to say that the evidence is overwhelming that the guaranteed income programs will have positive effects on well-being, education, health, adults, children, up and down the line, tremendous benefits. The work incentives are mixed, but I believe the work incentives are non-zero. But people may differ on that. And why that matters is it'll affect your choice of the G and the T. If you think work incentives are very modest and really not an important issue, then you should probably set a very high guarantee level and a very high T, a benefit reduction rate. you might as well concentrate all your money on the very low income families and phase it out very quickly, set a very high G to cover all those people with no other income, and then just have a very high tax rate. But if you think that work incentives are a serious issue, some that you really have to pay attention to, you should keep that tax rate low. And unless you don't want to spend a lot more money, that might mean reducing the G too. So that's where the work incentives comes in, and you have to make your own decision about how important you think they are, and set your G and T accordingly. The SSIP, as I see it, is a very promising program, and I look forward to seeing the results of the evaluation. So let me spend just a minute here answering some questions you might ask about this area. One, could a guaranteed income be one of the solutions to address economic and social inequality? And definitely, no question about it. It would reduce poverty by large amounts, and that would close the gap between higher income families and lower income families. It might also have very beneficial effects on education, which would raise the earnings of the families who receive it. Secondly, has that movement influenced the welfare and security policy, Social Security policy in the United States? Well, I just described, we don't have a guaranteed income right now, but the movement is here and it's very prominent. It did succeed, as I said, in passing a guaranteed income for children in 2021. It did expire, but there are many efforts to reintroduce it in U.S. Congress right now, and the movement is very strong. However, there's a very strong movement among the mayors of the United States, and many cities right now are testing and pilot guaranteed income, and they're usually using proper evaluation methods, and there's going to be a lot of good evidence coming out right now at the local level, the city level. Finally, what would my recommendation for successful implementation? What are the key elements? First of all, there's nothing like calculating exactly what the benefit levels are going to be, what the tax rate is going to be, in cost in advance. You don't want to be surprised by this. And I know a lot of calculations have been made already, but I think being prepared for the results is the best way you can guide the design. I know the design's been made, but there are many questions remaining. The one last point I want to make when I'll close here is whether a different point I have not made yet, which is that there's a lot of evidence here in the United States that you really need to help low-income families with their problems, with personal assistance, counseling, and helping them understand their situation. And that just doesn't mean just giving them a program and sitting back and waiting for them to understand it. They're not going to understand. Many people don't understand it. They can't navigate it. So they need personal assistance, and you need a government agency that is out there providing information, helping families understand the program, helping them enroll in it. So it's a point I have not made before, but I want to emphasize that that's a key element to the success of any new government program. So let me stop there. I want to thank you all again for asking me to talk. I hope I could be there in person. I'm sorry I can't be there in person. I know the discussion will be very excellent. And I look forward to hearing more reports of the discussion at the conference and more about the future of the SSIP as it progresses. Thank you for inviting me. Good night.